Okay. Hello everyone. I hope you all fine and doing great. And myself Raja Raguma. I take class for CMA Inter Group 2, paper number 10, Cost and Management Accounting and Financial Management. This is part third of cash flow statement classes. Okay, we start now. In the previous classes, we cover some topics. We just go through the topics and continue with our third classes. Okay. In the last class, sorry for background noise. In the first class of cash flow statement, we cover what is cash flow statement. Cash flow statement is a statement which shows how far utilized the cash with the business have been earned, and secondly we see the how it is useful, and then we cover what is cash and cash equivalents, and what is cash flow. Also we cover cash flow is the inflow and outflow. Cash and cash equivalents can include cash in hand, cash at bank, and cash equivalent is short-term investment. What are the easily convertible into cash is there. We see these also. Then we comes to cash flow statement. In the cash flow statement, determine the closing balance of cash. How to determine the closing balance of cash? There is a two method. First method is opening balance of cash. Add the inflow, add out less outflow. It will derive the closing balance of cash. In other method, opening balance of cash, net flow of cash, add the net flow of cash and derive the closing balance of cash. Net flow of cash equal to net flow of cash equal to inflow of cash minus outflow of cash. Okay, this is the shortest way to find out the closing balance of cash. Okay, then net flow of cash is okay. Then net flow of cash plus opening cash balance equal to closing cash balance. Okay, this also we see in the previous classes, and we come to the main point of cash flow statement. Net flow of cash is under three categories. Operating activity, three activities: operating activity, investing activity, and financing activity. Operating activity, I give some example also. I also tell the same example in very fast. I have wait. Okay, I am a chocolate manufacturer. I am a chocolate manufacturer. In the chocolate manufacturing business, what are the income and expenses I generated? That all comes in the operating activity, and then in the balance sheet, fixed asset covered in the investing activity, and in the balance sheet liability, equities and reserves, equities, owners equities and the long-term borrowings are covered in the balance sheet, or comes in the financing activities, and rest of all the other transactions all comes under the operating activity. Okay, we see in the briefly in the today's class also. Then I ask some questions in the second class, like if the question gives some transaction, how would you find out the activities? I give some example also like that. Purchase of machinery is an investing activity. proceeds from issue of equity share capital is a financing activity. Cash sales is a operating activity. Purchase of investment is a investing activity. Cash receipts from trade receivables, operating activity. Then once again, okay. Proceeds from sale of patent, investing activity. Income tax paid, operating activity. Refund of income tax is also operating activity. Bank overdraft is a bank overdraft borrowings or comes under the financing activity. And lastly, we see that credit sales. That credit sales is not covered in the cash flow statement. Okay, we concluded with that last class in these questions. We go with the two then format of investing activities and financing activity, and concluded with the operating activity formats. In this class we elaborate, we go to the format. Now only you understand the format concept. Okay, in the book they given some small meaning of the cash flow statement and go to directly the format and give sums. In these steps we cannot understand elaborate in that concept. Okay, I elaborate in 2 classes, and 3rd class only I came to the format. So you just understand basics and come to the format. It will be very easy to your solving the questions. Okay, in after each and every concept you understand, the cash flow statement is the easiest one. You take a score in a high scores in high level. You just understand in concept each and every concept in logical way. Let me go to the concept. Then cash flow statement is under 3 activity. As first, cash flow from operating activity and cash flow from investing activity, cash flow from financing activity. We all add this net increasing and decreasing in cash and cash equivalents we get, and then cash and cash equivalents at the beginning of the year. At the beginning of the year we get the answer of cash and cash equivalent at the end of the year. This is the format. It is the different way I tell in the this page. Okay, opening balance of cash plus inflow and outflow. This is the basics for that format. Okay, you just understand this basic. That cash flow statement format is so easy for you. Then come to the calculation of cash flow from investing activity. I give this format in a different way. I give some steps to follow the format. That is, you can understand easily how to derive that format in the easiest way. In the online examination, they don't ask the standardized format for the cash flow statement. You just work out the standard your shortcut format and answer the what they asking. It's more than enough for the online examination. I tell you again, cash flow statement comes in paper number 10 and paper number 12 also. You just read once, it will cover two times. Okay, just understand each and every concept. You can ask any question, any type of question, you just simply answer easily and very speed. You can work out it. You follow my format. Okay, calculation of cash flow from investing activity with the help of following steps. First, you ascertain the cash flow ascertain cash inflow from investing activity. Okay, investing activity, and ascertain the cash outflow from investing activity, cash flow from investing activity. Okay, there is 3 steps. Ascertain the cash inflow from investing activity, ascertain the cash outflow from investing activity, And third step, cash flow from investing activity. We see what are the cash inflow and cash outflows in the sums. This is the cash inflow and cash outflow. Step 1, there is a yes. Okay. Procedure for sale of fixed asset. This is a cash inflow, and proceeds for sale of investment is a cash inflow. Interest received is a cash inflow. Dividend received is a cash inflow, and rent received is a cash inflows. And the total of this you keep it as a A. You keep it as a and ascertain the cash outflows: purchase of fixed asset, purchase of fixed asset, purchase of investment, and purchase of intangible asset, if any. These are all as a cash outflows. You less it, you derived as a B. A minus B is a total cash outflow from investing activity, if total B, and A minus B is a cash flow from investing activity. Okay, this is the format for investing activity. You just copy it down, note it down. There is a 3 steps: cash flow from cash inflow from investing activity, cash outflow from investing activity, and third step, cash flow from investing activity, A minus B. Step 1 minus step 2 equal to step 3. Okay, va? Then step 1 and step 2, consider sale of fixed asset, sale of investment, interest received, dividend received, rent received is a step 1, and step 2, purchase of fixed assets, purchase of investment, purchase of intangible assets, step 2. And step 1 minus step 2, total it both, and step 1 minus step 2 is equal to cash flow from investing activities. Okay, then go to the cash flow from financing activity. Before that, we do some sum for investing activity also. Here I gave some example sum. We can do it. Sale of fixed asset is 2 lakh. Purchase of fixed asset is 1 lakh. This is a basic sum. I will recommend you to do the basic sum. And the issue of shares for cash, issue of shares for cash, 2 lakh. Then investing activity, they are asking investing activity, how you derived it. Here I put the format: cash investing cash flow from investing at inflow What is inflow? Sale of fixed asset. For sale of fixed asset, we sell our fixed asset, cash comes in. So this cash inflow of cash. Rupees 2 lakh. Then purchase of fixed asset, this is outflow. Outflow. because we purchase a fixed asset. Fixed asset comes in. You can also do it entry, journal entry in sale of fixed asset. Sorry, fixed asset account data to, sorry, say cash account data to fixed asset account. In purchase of fixed asset, fixed asset account data to cash account, cash or bank. Okay, in both entry we derived at the cash the debit. Debit the cash means cash comes in. Credit the cash means cash goes out. Okay, purchase of fixed assets, cash goes out, so it will be less outflow of cash, 1 lakh. Sorry. lakh minus 1 lakh. In the issue of shares for cash, share and the equities or owners equities are comes, they given blindly given only shares, no equity, the preference shares considered as a shares equities, and both the preference shares are financing activity only. If issue of shares are comes under the issue of shares for cash comes under the financing activity, inflow of cash. If the repayment of shares, it comes under the outflow of cash. Okay, so accordingly think that if simple concept is cash comes into the business, it is a inflow. Cash go out to the out of the if cash payment or cash paid to some X or Y, or if you have a repayment the loan, like that. If payment is goes out, cash goes out means cash outflow, outflow of cash. If any receipt, any issue of shares received in cash, or sale of fixed asset, like that, if you have received any something, that is inflow of cash. Simple in both in investing activity and financing activity. This both are same concept, but just identify that is fixed asset or liability, equities or owners long-term borrowings, that is comes under financing activity, and fixed assets comes under the investing activity. Simple logic, you just understand it and apply it in the your examination also. The 2 lakh minus 1 lakh equal to 1 lakh. This name called cash flow from investing, net flow from investing activity. Okay, we do the sum the simple way I explain it. Then we go to the format of financing activity. In the financing activity, yes, there also 3 steps, same as our investing activity: cash inflow of financing activity, cash outflow of financing activity, and cash flow from financing activity. We can derive it. In this, there are some included in this. In step 1, proceeds from issue of securities there. Okay, proceeds from issue of securities there, proceeds from long-term borrowings is there, and increasing in bank overdraft or cash credit. You just add it. These all are inflow of cash, and then outflow of cash. We see that repayment, like that before I said no. repayment of loan, redemption of preference shares, dividend paid, interest on debentures paid, decrease in bank overdraft and cash credit. These all are outflow of cash. If payment of loan means you pay the loan, cash goes out. Redemption of preference shares and debentures, we can pay to the shareholders and debenture holders, and dividend paid, paid in cash or bank, both are cash outflows, and interest on debentures paid, and decrease in bank overdraft and cash credit. These all are comes under the financing activities. Okay. The inflow minus outflow of financing activities comes as a cash flow from financing activities. A minus B is the same format as above, but different is there is we take a fixed asset in investing activity, financing activity, we take the liability sides, that issue of shares, long-term borrowings, increasing in bank overdraft and cash credit, you debit it, you add it, and decreasing in bank overdraft and the cash credit is you less that. Okay, this simple logic you can understand it and apply it. Okay, we see the example sum for financing activity also. Here I give the financing activity. Before that, they given read that long-term loans, repaid off loan. Okay, long-term loans. The long-term loan, you just understand, they given 2 years, 2016 and 2017. Okay, in 2016 the long-term loan was 2 lakh, and 2017 long-term loan was 2,50,000. Repaid was 1 lakh. Before that, you will not say that if they given 50,000 means you simply say that there is an if they given 1 lakh, if they given 1 lakh means in 2017, in 2016 2 lakh, repaid of loan is 1 lakh, and they give 2017 detail as a 1 lakh, means 2 lakh minus repayment of 1 lakh, the balance of account is to 1 lakh they given. Okay, in the before they given that, simply they give the as a different amounts, so we must put as a working notes the difference of the how the cash outflow and inflows logic we understand, put the ledger account like a working note 1. Okay, we derived that in the name of long term borrowings, just long term loans. Okay, you keep it as long term loans, loan account. Okay, long term loan account, here debit, here credit. You just before working cash flow statement, you must understand fixed asset always debit balance. Assets, you just assets always debit balance. You just start with the debit side, and liabilities always credit balance. Okay, you just start opening balance they given means opening balance given in the assets they given now, you just start with the debit balance. In the opening balance liability they given, you start with the credit balance. This is the basic concept you must be understand before you working the cash flow statement working notes. Okay, this is the logic, you just apply it, then only you can understand there is a negative value or positive value in that figure. Okay, in the long-term loan is a liability, this is the borrowings. So the opening balance of 2 lakh, it comes under the opening balance of 2 lakhs comes under the credit side of the balance sheet by balance B by D two lakh. Okay, then and what they asking, then to balance C by D 2,50,000. Okay, then repayment of loan is repaid, the loan repaid. In another concept I said, tell that in the debit and credit assets liabilities. If asset value increases, okay, if asset value increases, debit it, asset value decreases, credit it. Sorry. If asset value decreases, debit it. If asset value increases, credit it. If asset liability value increases, credit it. If liability value decreases. Sorry, I put correctly and I put sorry. If liability value increases, debit it. Sorry, decreases, debit it. If liability value increases, credit it. If asset value increases, debit it. If asset value decreases, credit it. Okay, this is the logic, you just understand it. If this logic you can understand, you can apply it in the payment and the receipts of the assets and liability. If here they given as a, here what they given, see here what they given, loan repaid. If it loan repay means the liability value increases or liability value decreases, liability value increases. Here we come to this format, liability value increases, what we apply, debit in liability account. The liability long-term loan account is a liability account, debit it. Okay, come to the ledger and debit it to bank. Rupees 1 lakh. Okay, like that you accordingly apply the logic in the both way. First logic I tell that opening balance they given, how you put assets, always assets are debit balance, in liability always credit balance, opening balance is there. Okay, in debit and credit increase of asset means assets increase means debit balance, asset decrease means credit balance, and liability side liability decrease means debit balance, and liability increases means credit balance. Okay, in the balance there is we total it sum of it. Here the total is 3,50,000. Here also comes 3,50,000. Okay, the difference between is 1,50,000. Then you tell me what is the 1,50,000. what is the 1,50,000? They repay the loan 1 lakh, and the opening balance of loan is 2 lakh. The closing balance of loan is 2,50,000. The difference between the 1 lakh is, yes, they get the loan again. Then only the closing balances increases. Then how you up till that? By proceeds for loan. Okay, this is the simple logic. This you taken, this is you taken in the financing activity. Okay, here come to the format. Cash flow from financing activity. I put shortly. You can write in your notes in elaborate. Okay. Here what we find out, proceeds for loan. That proceeds for loan means cash inflow. We get loan again. The liability value increases. Add it. Inflow loan rupees 1,50,000. Then less repaid. Repaid, how much you repay? 1 lakh. And that repayment of loan they given now, that will be not in the balance sheet. In the balance sheet they give means they give two different date. If they not give in the balance sheet means they give in the adjustment account. That adjustment account will be applying in this repayment of loan. Okay, or else you can also take as a repayment of loan in on that balance sheet also. That balance sheet they given the repayment of loan means they give same amount in the both year. Opening and closing is a same. That means only you can apply the inflow and outflow of loan. You can apply it, or else there is some working is there in hiddenly. They give some additional information. You just make it sure, because there is a logic. You find out the cash, where are the business they going, and where they come out, and you find out the each and every cash in the business they earn. This is the cash flow statement purpose. Okay, then balances, proceeds from loan, inflow of cash less repaid, that is repaid of loan, outflow of cash, net flow from financing activities is 50,000. We less the 1 lakh. Okay, accordingly you do this sum this like this only. In the exam you just put it in a paper note only. Accordingly you do it. in the both, I hope you have some understanding or the basics are strong in your mind for cash flow from investing activity and cash flow from financing activity. This is the basic format. I will teach in a simple way. Okay, you can understand it, and you cannot got it that points. You can just rewind it that video and play again. You just understand it once again. Then thank you. Then I concluded with operating activity. Before operating activity, I have give some explanation. What is operating activity? In the operating activity, we see in the I tell that operating activity is the income and expenses. What is income and expenses? Why we put operating activity? I tell before, cash flow. Cash is the only cash item we take in the cash flow statement. In operating activity, we all items are cash items. No, there is also non-cash items. Also, we have put in there, like depreciation, like reserves, like tax, like dividend. All income in the operating activity. So before we see the operating activity, we just understand some concept in the operating activity. In the sole proprietorship business, what? In the sole proprietorship business, what they put the final account? Trial balance, sorry, trading and profit account, like that trial balance. They started trading and profit and loss account. They put, okay, like that. We find that GP, and in the GP we find out the NP. All in the GP we find out the purchase and sales, direct expenses, and in the NP indirect expenses and indirect income. We all find this. The difference is NP. Okay. In the company, we do in the sole proprietorship or a partnership. Sole proprietorship or a partnership, we do like that. Okay. In the company, these case will be different. Okay. And I add some point also. In the net profit, in the sole proprietorship partnership, they have divided into some other parts also. In the net profit only, they get a reserve. They are allocate to their reserves from that net profit, and they give partners interest on partners capital on partners capital, and they also give the salary to the partners. All are comes under the net profit only. Okay. All are comes under the net profit only in the sole proprietorship and partnership. That net profit, we have allocated that reserves, interest on capital, for interest on capital and salary paid to the partners all comes under the net profit. In the company, in the other hand, in the company, same net profit, in the company, same net profit, they divided into sorry, same net profit, they divided into some other heads also. In the company, what they giving, what they get the sources of funds, they get from the shares. In the shares, they return to the shareholder. What they return the shareholders dividend. Dividend. Dividend is repayment of profit to the shareholders, and they also get some reserves. Then they take some taxes. They take some taxes, provision for taxation, like that they taken from the profit only. Like that, they also in company also they have some different like that, allocate that net profit to the some parts. Okay, here we profit and loss account and sole proprietorship, we put the statement called P and L appropriation account. P&L appropriation account, you just understand that P&L appropriation account, we put the net profit, we allocate the reserves, interest on capital, salary in the sole proprietorship partnership business. In the net company net profit, we allocated in same concept in the company financial statement, we comes under in the net profit, we allocated that reserves, dividend, tax, like that. Okay, this is the concept of, I explained that reserves, dividend, and taxes. In the company, we allocated from the net profit only. Okay, in the cash flow statement, in the cash flow statement, in the cash flow statement, okay, we do all the thing in the reverse way. How to do it? We know first of all operating income. Okay, in net profit, above said that net profit, we do like a format, net profit minus taxes, we put minus reserves minus dividend. Balance we called as a, like that we put balance we called as a operating income. Okay, in the operating income, how it derived? Gross profit minus operating expenses equal to operating income. Okay, like that we do in the P&L account. We reverse all the items, we find out the exact operating income, like this. If we less the taxes, we add the taxes, we less the reserves, we add the reserves, we less the dividend, we add the dividend, like that we do. This is our first format, P or D. T for taxes, R for reserves, and D for dividend. That net profit. equal to net profit, add the first step, we must add the taxes, reserves and operating, dividend. You just add it. It will be comes under operating profit before extraordinary item and working capital changes. Like that it will becomes. Here also not steps over. We go to the next step. These all are each and every concept. I will explain in some way, like a basics way. I explain it. You just understand it. In the cash flow statement, okay, we do the net profit. In the P&L account, we do the net profit here this side. Here this side, in the P&L, we do like this only. The net profit minus tax, reserves and dividend, we get the operating income. In the operating income, we do GP minus operating expenses is a operating income. In the cash flow statement, net profit, we add that all the taxes, reserves and dividend, we get the operating income. Exact operating income we want to get. We do the all calculation in the reverse order. Then only we excluded that non-cash items and included all the cash item in the operating activity. Then extraordinary item, like that all format we see in this. Okay. Simply we understand in P&L account all cash item and non-cash item are recorded. Okay. In cash account, closing balance is rupees 50,000. I have one question. In the closing balance of balance sheet, closing cash balance is 50,000. In the 50,000, you have exactly, it will be tallied to the profit of your business. You tell me, the cash of closing cash of 50,000 is matched with the profit of your business. Why the profit and cash balance is different? Because profit we added or included in all non-cash item also because of our exact match with the balance sheet. The closing cash balance is available, closing cash balance or bank balance is available in the business in the real account. Okay. In the profit, all cash, non-cash item will be recorded. That one, then only the difference will become. Okay, that both concept will be understand in the simple way. We find out, we break that, we find out the exact cash, we reverse all the items, like if a non-cash item is like if non-cash item, I give an example. If a all cash item, they given us a 30,000. Okay, sorry, all cash item they given us 40,000. Then they give some net profit as a 10,000. Then they give 20,000. They give that also 40,000. You keep 40,000. They give non-cash items in the expenses column. The non-cash item expenses, you assume that like that they give us 30,000. You just add it the non-cash item, all the cash items, and net profit is the 40,000. Like that they given. We find out the closing cash balance. In that time we less that all non-cash cash item, like 40,000 they give cash item. In the net profit 40,000 less the non-cash item 30,000, total it 40 40 80 80 minus 30 50,000. Okay, like that we find out the closing cash balance. This is the simple logic I put it and derive the sum. Like that we move to the next level to have some idea about the operating activity in detailed manner. In cash flow statement, note it down if you want. Cash flow statement, only cash items we take. Okay, in operating profit, finding reserves all cash item to be get reverse all cash item to get operating profit. Okay, in the cash flow statement, in the cash flow statement, I give some example sum. You just follow with me. In the cash flow statement, in some you take as a question in right side. Right side is the question. Dividend they given like 1,000. Then reserves, just don't concentrate my handwriting, just I write in roughly, just follow my concept only. Is 8,000, that is 8,000. Then tax they given is 7,000. Then depreciation they given. In the sum you assume that depreciation they given 1,500. Then interest they given, interest paid they given 500. Simply you understand now as an interest they given. Don't go to the deeper concept, just go to interest they given 500, like that they given. In the P&L account, you assume before that cash flow statement. In the P&L account, what we do, we add the depreciation, we add the interest, we add the interest, sorry, we less the depreciation, we less the interest, because the income minus expenses is come to the profit. Okay, we less that depreciation, we less that interest, we less dividend, we less dividend, we less reserves and surplus, we less taxes also. In P&L they given net profit they given as a 10,000 they give. Okay, you assume that in net profit they give, like that we sum they asking. In the cash flow statement we do this calculation in reverse way. What we do? Net profit 10,000, add, I tell that T or D, T or D, T for taxes, R for reserves, D for dividend. Add the T or D. Tax how much? 7,000. Tax reserves how much? 8,000. Then tax reserves and dividend how much? 1,000. Okay, like that they given 15, 16, 16,000. Add that 26,000. Then add depreciation, how much they given depreciation? 1,500. Then add interest 500. This is 2,000, 28,000. Like that they given, we add it. This is only we tell that operating profit before working extraordinary item and working capital changes. Okay, this is the format. This is the operating profit for first step format. Okay, just understand this format, and I hope you cover that most of the concept. In the sums, we come to the sums. I cover that investing activity, I cover the financing activity, and I cover basics of operating activity also. I hope this is much enough for you to understand the basic knowledge of cash flow statement, all activities and the transactions. We go to the next level of the sums, and I cover all the topics of the sum also. We concluded with the format of operating activity, and next class we do some sums in that. You can follow with me, and we can do all the sums in the books and the suggested answer also in the MTP, previous MTP also. I give some working notes or homework assessments like that. You can just work it out after the all the concept I explain it. This is very easy to you can do the sums in the your we follow the steps stepwise, order wise. There is a 3 steps in investing activity and financing activity. Inflow minus outflow derived as a cash flow from investing activity or a cash flow from operating activity. The same as there is a 3 steps in operating activity also we see in the sum. Here we come to the operating activity, calculation of operating activity from helping that 3 steps, following steps. What is the first step? We find out the calculation of net profit before tax and extraordinary items. The tax and before extraordinary item, we find out that reserve, dividend, taxes like that. We have put it that net profit before tax and extraordinary item, and we calculate that less that extraordinary item. Before we see that, I explain in format wise. Calculation of net profit before tax and external item, there is a difference between the open. You must be understand this. The balance sheet, they give us a two dates. One day opening balance and another one is closing balance. That opening balance, opening balance and closing balance of difference between the opening balance of closing balance of P&L is, first you put it, for example, they give us a 5 lakh like that. The different, if opening is 10 lakh and the closing balance is 25 lakh like that, they given means the difference is 15 lakh. Okay, the difference between the opening and closing will be applying net profit as a first step. You mistake in first step, you always, your all for all answer will be wrong. You must understand the concept. Then that's why I come to the easy concept. I covered that investing activity and financing activity. Operating activity is the main concept. You do not for mistakes in the first concept. If any mistake in there, the whole sum, if you correctly put that investing activity and financing activity, there is only you get the step mark if your answer is correct, or else that whole question is wrong. You just concentrate on the first step of operating activity in a detailed manner. First, the difference between the opening and closing of a profit account, you just apply it as a net profit, and then you come to the add that reserves, transfer to the reserve, proposed dividend like that. Proposed dividend, interim dividend, there is another hidden topics I will explain in another following classes. You just go through our classes. For regular following is a must. Then interim dividend, provision for taxations, then provision for taxation, then extraordinary items, if any, debit the profit and loss account, less the decreasing in reserves. In some we do now that some I will explain that each and every transaction is that. Then refund of taxes credited, if refund means we less it. If you payment of taxation means you add it, refund of taxes means you less it. Okay, like that you do accordingly. Then we derive that net profit before taxation and extraordinary item. After we conclude that first step, we go to the next step, calculation of operating profit before working capital changes. In this net in the answer of this, we apply answer is this is 50,000. We put the next step also 50,000. Okay, add the depreciation for the fixed asset, loss of sale of fixed asset, goodwill, patent right, return of any other preliminary expenses, discount on issue of debentures, interest on debentures and borrowings, like that. You all this add this and less the profit on sale of profit, less the profit less that profit on sale of fixed asset, and interest, dividend, rent received is any that receives income, indirect incomes is any that you less it. We derive that operating profit before working capital changes. In other words, this funds from operation, we study in the fund flow statement, we same like that, funds from operation we find out, add it and less it, difference is the funds from operation. The step number 3 is working capital changes. We find out in the working capital changes there is a current asset, current liability. Okay, add and less. Decrease in current asset, we add it. Increase in current liability, we less it. Increase in current asset, we less it. Decrease in current liability, we add it. Sorry, we less it. Okay, this is the chart. You just follow the chart, or else you can reading it. Same I given it. Decrease in current asset, we add it. Increase in current liability, we add it. Increase in current asset, we less it. Decrease in current liability, we less it. The both differences cash flow from operating activity. Simple. We follow the 3 steps, and accordingly the third step is working capital changes, and second step is if there is a profit or loss of fixed assets, we loss it means add it, profit means less it. Indirect expenses like in non-cash item of expenses like depreciation of fixed asset, interest on debentures and borrowings, preliminary expenses, and amortization like that, goodwill, patent rights, trademark, written offs, we add it. And indirect income like interest, dividend, rent receipts, any further we indirect we less it. And profit on sale of fixed asset, we less it in step number 2. And step number 1, I tell that I tell that in before shortcut what T or D. Okay, T for taxation or for reserves, and D for dividend. The dividend they split at proposed dividend and interim dividend. I tell in next class. Transfer to reserves if increase. The difference between they tell in increase and decrease mean I give some example and conclude that this class. If 2010, 2011, that reserve is they given us a 1 lakh, 1 lakh and 2 lakh. In 2010 and 2011, there is only one time they ask in a reserve. I give for question number 1, question number 2. Question number 2 they give 2 lakh and 1 lakh. Okay, in question number 1, in question number 1, they in 2010 1 lakh is there reserve, and 2011 2 lakh reserve is there. Reserve values increases, we add it. In question number 1 we add it. In question number 2 reserve will be decreases, so we will be less it. Means we utilize the reserve, so we reserve cash will be goes out, so it will be less. And add means you add the cash, cash comes in, we add. This is the logic in increasing and decreasing of reserves. Okay, and the extraordinary item like any other thing will be added. It will be added in the net profit, difference of opening and closing balance. This is the 3 steps. I will be explaining in the simple way. You just note it down, these steps if you want. Okay, I conclude this class today, and we continue with the next classes. In I start with the whole sum. I cut that whole cash flow statement in different parts. In 3 classes, I explain in each and every concept. I hope it will be understand for you all. And if any doubts, you can ask in the comment section. If you have any other queries, also you can also comment in the comment sections. Both are same, na? Sorry. Like that, if you have If you want a contact with me, Telegram at CMA Rajaramkumar, you can contact me. That username is me. At CMA Rajaramkumar, you contact me. Thank you, Pradeep sir. Thank you for the opportunity. I also conduct a MCQ test series, and I sell that MCQ compiler also. Yes, I am the RAK class admin and founder of the RAK class. I only sell that MCQ compiler and MCQ test series for the CMA Inter student. And in future, in coming weeks, I also the announcement I will give in this video. I conduct the test series for CMA Inter, Foundation, and Final. All 3 levels, all subjects I will cover that test series and MCQ compiler I will be covered. This announcement will be given by me, RAK class. That official publishing on the MCQ compiler and the MCQ test series website will be uploaded in around the 15th of March will be launched. I hope, and we see in that day. I dedicatedly put the video for that in the YouTube channel Pradeep Diyani sir YouTube channel, CMA Pradeep Diyani sir YouTube channel. Thank you. And if you have thank you for watching. Thank you.